All right, let's look at the data. Today, we are diving deep into one of the biggest market anomalies out there, Trump Media, ticker DJT. There's this huge divergence between its stock price and its actual fundamentals. So our job is to break down the institutional flows and the market forces that are creating this wild setup.
And this number is the market anomaly that we have to talk about. According to FactSet, DJT is trading at over 1,200 times its annual revenue. Let me be really clear here. That is an absolutely astronomical valuation. You just don't see numbers like that unless maybe, it's a biotech company that just cured cancer. This isn't just a high valuation. It's a signal that there's a serious disconnect from reality. So what is actually driving this price?
So first things first, we need to really wrap our heads around this disconnect. We're going to measure the sheer size of the gap between the stock's price and what the company is actually doing on an operational level. And the best place to start for any social media company? The users.
Okay, now just look at the difference in scale here. Truth Social has what, maybe 6.3 million monthly active users. X, the platform formerly known as Twitter, has around 600 million. We're talking about a user base that is roughly 1% of its main competitor. This data right here just makes you ask the question, how on earth can a platform with this little engagement justify its market cap? The numbers just don't add up. So to get a clearer picture, we have to go way deeper than just user stats. We've got to look at the financial filings. The numbers a company reports to the SEC. They don't lie. They tell the real story of a business's health, its cash flow, and whether or not it's actually making any money.
And yeah, this slide pretty much lays out the core problem. For the third quarter, total revenue was under $1 million. And get this, it was down from the year before. At the same time, the company lost almost $55 million, mostly because they spent $20 million on legal fees. We're talking about significant negative cash flow here. This is not a growth story. The company is literally burning cash, not making it from its main business. But wait a second. The company did report some income. So where did that come from? And this is a really crucial point. It didn't come from selling ads. The company made $15.3 million from option premiums on Bitcoin-related securities. So this is income from financial trading, not from its actual operations. That's a huge red flag that tells you the social media business itself isn't what's bringing in the cash. Okay, so if the fundamentals are this bad, what in the world is holding up the stock price? This is where we have to shift gears, move from looking at spreadsheets to looking at psychology. The price action here seems to be driven by forces that have almost nothing to do with revenue or profit. It's all about the narrative. On one side of the argument, you've got this deeply bearish sentiment. This viewpoint basically says that the stock is completely untethered from reality and it's acting more like a crypto coin or some kind of political tool than an actual business. To these folks, the price is purely about finding a greater fool to sell to, not about any kind of real financial analysis. But then you have the trader's perspective. And this view, it acknowledges the massive risk and the terrible fundamentals, but it sees a potential momentum trade. It's a bet, not on the company's future success, but on the predictable psychology of everyone else in the market. This is a trade based purely on narrative and order flow, not on value. And this famous quote from the legendary trader Ed Sykota, it just frames this whole situation perfectly. Some people in this stock want to make a political statement. Some want to gamble on a short squeeze. Others are shorting it to zero because of the fundamentals. The market is just the place where all these different desires clash, and the price is what comes out of that fight.
Okay, so let's pull all this together. When you've got a stock that's this polarizing, it is absolutely essential to clearly define the arguments on both sides. We need to synthesize the data-driven case against the narrative-driven case to really understand the full picture. So here it is, side by side. The bear case is all about the numbers, an insane valuation, negative cash flow, revenue that's going down, and a tiny user base. It's a fundamental analyst's absolute nightmare, but the bull case? It just ignores all of that. It's built on things you can't measure. The stock's power as a political symbol, its potential for the kind of crazy volatility and short squeezes that traders live for, and an investor base that's driven by belief, not by balance sheets. Now, we have to be really clear here. This analysis is for educational purposes only. It's based on data that's available right now, and that data changes fast. This is not financial advice. It's so important that you do your own due diligence before making any kind of investment decision. And all this leaves us with the ultimate question, right? Is DJT being traded like a company, or is it acting more like a currency for a political movement, a symbol where the price is really just a reflection of belief more than anything else? That's the puzzle you have to solve. We're tracking these flows in real time. So while you're thinking about the next move, check out the tools in the description we use to track this kind of institutional data and market sentiment. All the links are down below. And hey, like and subscribe for more deep dive analysis. Stay disciplined, stay liquid.